Good afternoon, my dear students. Today we are going to learn about financial statements. If you look at any corporate entities, they prepare three kinds of financial statements. One is statement of P&L, the second one is balance sheet, and the third one is cash flow statement. The statement of P&L we prepare to find out the profitability of the business, to find out whether the business is running in profit or it is suffering from losses. And next we prepare balance sheet to check the financial position of the business on a particular date. And the third one is about the most liquid asset, which is cash in hand, cash at bank, short-term investment. To check the inflow and outflow of cash, we prepare cash flow statement. Now this cash flow statement shows three kinds of activities. One is operating activities, second one is investing activities, and financing activities. Now here we find difficult to prepare cash flow for operating activities. Operating activities, you have to start with net profit during the year, that is closing balance of profit minus opening balance of profit. Then you add up basically the items which are appropriated from the profit, like proposed dividend, provision for tax, interim dividend. All these items you add back. If at all there is general reserve also, we add back. Then we get net profit before tax and extraordinary items. Then we add non-cash and non-operating items which have been debited to P&L account, like depreciation, goodwill written off, loss on sale of asset. And we minus non-cash and non-operating items which have been credited to P&L account. I can give you an example like profit on sale of asset. And finally you get operating profit before working capital changes. And then you try to adjust your current assets and current liabilities. If there is increase in current asset and decrease in current liability, then you minus. And when there is decrease in current asset and increase in current liability, we plus. And finally we get cash flow from operating activities before tax. And then we minus tax paid during the year. And finally we get cash flow from operating activities after tax. If at all there is a minus figure, we have to mention cash flow used in operating activities. If it is positive or it is showing a plus sign, then it will be cash flow from operating activities. So that's all, my dear students, about cash flow statement. Thank you so much.